This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation. All Bitcoin, all the time. I'm your host, Christine Lee, checking in live with Bitcoin right now. The CoinDesk Bitcoin price XVX index currently at 39,436, climbing almost 2% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Let's take a look at our top stories. The S&P 500 showing the death cross, a long-term bearish indicator when the 50 and 200-day moving averages cross paths. The chart pattern follows a head and shoulders breakdown, also a bearish pattern. CoinDesk's Omkar Gaboli saying Bitcoin tends to move more or less in line with the stock markets. Meanwhile, Hong Kong's stock market had its worst day since 2008 this week, with the Hang Seng China Enterprises Index, an index of mainland China companies listed in Hong Kong, falling 16% in the last 5 days, while the overall Hang Seng is down 11%. Analysts saying the market crash in Hong Kong is driven by regulatory, not monetary policies, which is why the contagion has not spread to Bitcoin. Heading to Saudi Arabia, they're in discussions with Beijing about pricing some Saudi oil sales to China in yuan instead of dollars, according to a Wall Street Journal report. Saudis are questioning longstanding U.S. security commitments to the kingdom, such as lukewarm support for the war in Yemen, the White House's attempt to add an Iran nuclear deal, and shock at the American withdrawal from Afghanistan. The move would be a challenge to the U.S. dollar, which has dominated as the medium of exchange for the oil trade for decades. And Russia will use Chinese yuan to pay its foreign debt obligations after Western sanctions cut Moscow's access to U.S. dollars and euros within its own foreign exchange reserves, according to a Reuters report. Russia's finance minister saying payment could alternatively be made in rubles to prevent default.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Expect turbulence ahead. Bitcoin's implied volatility creeping higher ahead of the Federal Reserve's rate decision Wednesday, which is perhaps a sign that traders are setting up options positions that would benefit from BTC price swings. The annualized one-month implied volatility, investors' expectations for price turbulence over the next 4 weeks, has increased from 68 to 77% this month, according to Skew data. The 3- and 6-month gauges have also gone up from roughly 67% to 74%. An uptick in implied volatility indicates increased demand for options, which are hedging instruments. Seasoned traders use options to hedge bullish or bearish risks and often buy both to capture returns from any macro data release or binary event-related volatility. Buying both call and put options represents a bullish view on volatility. All right, joining me now to discuss Bitcoin price and more is Sara Shi, Chief Product Officer at crypto infrastructure provider Prime Trust. Hi there, Sara. Thanks for joining us. So a lot of news happening, a lot of volatility in the markets. But what's your outlook on Bitcoin?
Hi, Christine. Delighted to be here. That's a very good question. I think here at Prime Trust, we see a lot of volume. A lot of our customers are fintech startups in the crypto space and very heavy on Bitcoin. Based on what we're seeing, the demand for Bitcoin is high. On the long term, we're pretty optimistic, and we're actively thinking about new products to make Bitcoin more accessible to the everyday users. The other factors are the macro level factors. Like you said earlier, the equity market tend to be going in line with crypto market. Crypto market is trading it a little bit. But crypto is also a currency, right? There's the word currency in it. It's a store of value. There's also the technology behind it. So for me, there are multiple factors driving the crypto price so that it moves with equity market, but not always in tandem. I think today the most interesting thing is, of course, inflation, oil prices down, and then with tomorrow's Fed meeting, people have further consumer confidence that the Fed is going to do something, right? It's all about the investor sentiment. So I think that will really help with Bitcoin price. The other factors that are out there at play, I mean, the war is always a factor. And then in China, there's a lockdown. There they have a new COVID lockdown, and that's likely going to drive supply chain issues, and that will further affect price. So those are factors that kind of work against Bitcoin. So I think the hardest part is just there's so many factors. Which one is going to stand out for the short term is really hard to say. But as an infrastructure provider, right, we look at longer term, the level of interest in Bitcoin.
So much to unpack there. You mentioned the Fed, and they're expected to address inflation tomorrow. Russia's invasion into Ukraine, the pandemic, supply chain issues as well. So do you think a possible rate hike there, the estimate is 25 basis points. Do you think that would offset inflation much?
It's not going to be offset. My background is in economics, right? So I think the key thing is what people believe. One rate hike may not offset it, but it will boost people's confidence that the Fed is going to do something about inflation, and that will ease the market a little bit. I think it's important. And I think the key is probably consistent rate hike, a series of rate hike that will really boost people's confidence. And I think it's necessary, right, with all the other macro events going on. Personally, I think the Fed is likely to they're going to engage in a series of rate hikes.
Mm-hmm. And you also mentioned China. They have a COVID outbreak. The stock market is going down. Yet, apparently, some analysts believe that most of it is regulatory within China. It's not having a monetary effect, so it's not impacting Bitcoin. Is that something you agree with?
I think the correlation is a bit more delicate. It's more about the supply chain interruptions, right? And with the supply chain issues, it's going to drive up prices. When it drives up prices with the inflationary pressure, it will also add pressure onto the crypto market. It's more about the inflation concern that's not going to ease with the supply chain issues going up in China. So that's my concern, and because of that, I think it's more likely that the Fed will do something to contain inflation. They just absolutely have to.
And looking at Saudi Arabia, they're an important U.S. ally. They're looking to accept yuan for oil. Russia wants to pay their debt obligations in yuan. There are whispers that these are signs the world is headed toward de-dollarization. Is that just panic, or is it possible? Again, could it possibly be good for Bitcoin?
I think it could be good for Bitcoin. There are a few reasons, but it's not necessarily a bad thing, right? I think having more than one strong currencies will help. And also, let's not forget, China is working actively on their blockchain initiatives. I think any initiatives that will drive mass adoption of crypto will help Bitcoin, right? Bitcoin is the digital gold. It's got limited supply as a store of value. For people who are getting into crypto for the first time, they will go to Bitcoin. So the demand for Bitcoin, I think, will continue to rise, which is also why I think it's so crucial to build products as a product person, to build products that enable mass adoption of Bitcoin, to make it more accessible to people, right? People can use it not just as a store of value at times of crisis, but also as a currency. It might be volatile, but if we can just ease the hurdle to use it and reduce the friction, it might have a chance being adopted as a currency. I remain optimistic.
And from the perspective of Prime Trust, you handle a lot of crypto infrastructure. I wonder if you see any regional differences in the demand for Bitcoin. I don't know if you have services in Ukraine or in Russia, or service Russian, Ukrainian clients, but do you see how that demand is going?
That's a great question. We see demand across the board, but the use cases for Bitcoin is slightly different, right? Outside of the US, I think people are more, especially in developing countries, people are more used to inflation and even hyperinflation. So they're very drawn to use Bitcoin as a store of value and even as a currency, because if their own currency is already highly volatile, the crypto volatility kind of is less of a concern. So, and the ease of use, we really see more apps developing and startups in this space trying to make Bitcoin a currency outside of US. Now we do see it in US, right, as a means of payment and build on top of Lightning Network. We're starting to see that, but we definitely see more of that at Prime Trust outside of US, which is kind of interesting to watch it unfold.
All right, Sara, thank you very much for your analysis. Appreciate you coming on the show.
Pleasure's all mine. Thank you.
Right, that was Prime Trust Chief Product Officer Sara Shi. Coming up, the EU is closer to passing sweeping crypto regulations. We'll talk next. The European Union's sweeping crypto regulations package is one step closer to ratification. The proposed markets and crypto assets framework was voted through without a contentious provision seeking to limit the use of cryptocurrencies like Bitcoin that use proof of work to verify transactions on the Bitcoin blockchain. All right, joining us now to discuss is Patrick Hansen, Head of Strategy and Business Development at Unstoppable Finance. Hi, Patrick. Thanks for joining us.
Hi, Christine. Thanks for having me.
So first of all, maybe you can outline the significance of this legislation going through EU Parliament.
Yeah, so I'm more than relieved that basically this de facto proof of work ban hasn't made it into the final draft of the EU Parliament. I think that amendment would have completely crippled the competitiveness of European crypto businesses, since it would have prohibited basically European regulated crypto asset service providers to offer services on top of proof of work based assets such as Bitcoin or even right now ETH and others. And obviously prohibiting European companies to use those proof of work based assets, the largest assets in the market in terms of market cap, in terms of trading volume, in terms of adoption, would have just killed their competitiveness. And so, in my opinion, it would have pushed dozens and dozens of European companies outside of the EU, talent and capital outside of the EU.
I was going to get into that. So yes, the EU parliamentarians, they rejected a proposal that could have effectively banned Bitcoin across the EU yesterday. It's the markets in crypto assets framework had that provision limiting proof of work mining. You knew quite quickly that this proposal had failed. So I'm just curious, what's your relation to the EU Parliament's Economic and Monetary Affairs Committee, which shot down ultimately these proof of work limitations?
So basically, prior to joining Unstoppable Finance, a Berlin-based crypto startup that is building the most intuitive and the next generation of non-custodial wallet, I was working for Bitkom, the largest tech association in Europe with over 2,000 member companies. I was leading the crypto and blockchain regulatory activities there, and that's why I was working on that proposal for a couple of years already. That's why I was in close contact, and I had already established relations with members of the European Parliament, and that allowed me to obviously get that information quite quickly.
So you're sitting in a very unique position. We saw that the vote was 30 against and 23 in favor of the proof of work ban with 6 abstentions. That's still pretty close. So for the 23 people in favor, what's their reasoning and how knowledgeable do you think they are of the technology in order to make this kind of determination?
I mean, it's hard to tell how knowledgeable they are. I think obviously, their main concern was the energy consumption of Bitcoin, which they see in mainstream media being compared to the energy consumption of smaller to middle-sized European states. I think that was the main driver, just to cut down on that energy consumption. I don't think that most of those members of parliament have dealt with the details of how Bitcoin and proof of work mining works, and how, for example, also a lot of renewable energies are involved in mining, especially in the European Union, where energy prices are quite expensive, and how proof of work could even foster and strengthen the energy grid. So my gut feeling is that most of the time it's the lead negotiators, so the rapporteur and the shadow rapporteurs of the European Parliament, being quite familiar with what is on stake and what is on the table. But most of the other members of Parliament don't have a detailed overview of the matter.
And so, Patrick, is there concern that this provision could pop up again?
Yeah, I mentioned yesterday also on Twitter that there is one last option for the political parties that have lost the vote yesterday in the Econ Committee. They could basically request that matter and that amendment to be voted in the plenary session of the European Parliament. They would need 1/10 of the votes of the European Parliament for that. That is around about 70 members of Parliament. Theoretically, they have that, but I don't expect that to happen. I don't think they would do that primarily because that would delay that markets and crypto assets regulation, and that would also delay a parallel regulation on anti-money laundering requirements for crypto asset service providers. I don't think that those political groups, especially the Greens, the Socialists, and the Left, they have any interest whatsoever in delaying that. So I don't expect it to happen, but there is the theoretical option.
All right. So when taking a look at the markets and crypto assets framework, do you think this legislation will be more harmful or helpful to the crypto industry as a whole in terms of how it's being shaped right now?
As a whole, I think that the benefits will largely outweigh the downsides. I think the main benefit of the markets and crypto assets regulation is that it will create one comprehensive and overarching framework for handling crypto assets and crypto asset services in Europe that will allow businesses such as custodians and brokers and exchanges in Europe to scale way faster than before, where we had just a patchwork of national regulations with diverging licenses and frameworks in Germany, for example, in France. So I think the harmonization of the regulatory framework will basically be the main benefit and will allow companies to scale faster.
All right. So that markets and crypto assets framework draft will move on to a trilogue, a formal round of negotiations between the European Commission, Council, and Parliament. So we'll wait to see what happens there. Patrick, thank you so much for joining us.
Thanks, Christine. My pleasure.
That was Unstoppable Finance Head of Strategy and Business Development, Patrick Hansen. And that's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 o'clock in New York. Also join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.